All right, guys, I'm here in Florida. I am with a good friend of mine, John Williams. This is John Williams' channel and a couple others as well. We'll drop them in the show notes here. But today I'm honored I get to be part of his studio here. And we just shot the first part of this podcast on his channel. So the link's also below. Check it out. If you don't know who John is, you're going to love him. So guys, if you've been watching my channel, you would know that some of the most popular videos that I've had actually are with John. So when he said, hey, you want to come to Florida and record in my new studio, I jumped at the opportunity. And like I said, this is kind of like a follow-up, a second part, if you will, to a pretty lengthy conversation that we've had, but I think you might like it. So John, let's do this, man. Welcome to my channel and your podcast studio.
Thank you. Thanks for having me. Number 3, third time.
Tell everybody who you are.
My name is John. I was a real estate agent in Beverly Hills from 2009 to 2019. Saved up money along the way, became a real estate investor. And as I was doing that, I was documenting my journey on Instagram and on YouTube and built up a following and have a couple online businesses. And yeah.
Yeah, well, I learn a lot from you. So, it's kind of interesting because, being in business over 30 years, if you're not learning and, gathering information from other people. And so you've actually helped me in my podcasting because this is like new stuff for me, man. I wasn't born with a device in my hand, but we're going to talk about real estate today, guys. And I think we're going to talk a little bit about mom and pop landlords because there's a lot going on in the real estate business. And, a lot of people think that all landlords are just bad, right? And I know, we talk about the housing market and so many people are being pushed to rent and they want to buy. But then there are also, the landlords on the other side of that are trying to provide homes. And it's a shortage in that, at least, in rentals in my Maryland market. And I think it might be a shortage in rentals all over. I think a lot of inventory is getting ready to hit the market, but we're not going to talk about the big operators for a minute. I want to talk about the ones that I believe, John, that we could see some of this inventory hit the market, right? I think that when I'm talking to a lot of landlords, they are considering getting out of the business for multiple reasons. And so maybe, and I know you're an expert in that field, so we can kind of talk about what's happening to the landlords, the mom and pop, and why they might be selling. But I think it's going to be an opportunity. A lot of people, they dove into the short-term rental market or even midterm with travel nurses, stuff like that. But the short-term stuff that we know of, Airbnb, VRBO, that kind of inventory, a lot of people with cheap interest rates bought second homes with the intentions of maybe living in them, maybe not, for a couple weeks a year, a vacation rental, whatever. But they bought these for the intention of jumping on the bandwagon of being in the short-term rental business. And I think that we're going to see, what do you think? Do you think we're going to see some of that inventory hit the market?
I think we just saw absolute mania across residential, commercial, real estate. Everyone was bullish on everything. And I think that we're going to see a big wake-up call come. And mom and pop investors, they own 20 million housing units in America. A lot of people don't realize how much inventory is held by small business owners and people that own a little duplex. Maybe they bought a duplex for their retirement plan, and now they are looking at what's going on, and it's going to get harder for them to hold on to it.
So a lot of them started to really question whether they should be. If we go back to forget the short term for a minute and start talking about the long term landlords, the mom and pops. A lot of them were affected during the pandemic because people, in a lot of cases, stopped paying the rent.
Yeah, especially in a place like California, where I was. My intent was to invest heavily into California, Los Angeles specifically. I knew what I was doing, and I did well while I was doing it. But when the eviction moratorium started taking place and rent became optional, and you're paying $300,000, $400,000 a unit, tenants don't really have to pay rent. If you want to take a tenant to court, you can't. Or even if the eviction moratorium wasn't in existence, you're paying $300 an hour for some attorney. Then you're paying a buyout. You're paying them $7,600, upwards of $10,000 just to get them out, plus your legal fees. So you start adding all this stuff in, and then the fact that rent was basically optional for 3 years, it was a nightmare scenario for property owners.
I actually know in Maryland, and we're kind of back to evictions again.
Yeah.
And so the process isn't taking quite as long. but I know that there were two scenarios that you have. So you have if we just talk about a tenant that stops paying rent, right? If they're in a lease, so that's really like a failure to pay, right? Or there can be a scenario where it's tenant holding over, where the landlord said, we went month to month, we were in a year lease, and now we've gone month to month, and I'm going to give you 60-day notice to vacate because you haven't been paying me, and I'm going to terminate your lease. And so what happens is if they refuse to move out, that's a scenario where it's called tenant holding over. And those two defaults, defaulting situations, in those two scenarios were protected by the eviction moratorium, right? But there was a scenario that we saw with squatters and, people that didn't have leases, right? I would still say they're squatters, but maybe you had somebody in there, and we're a statutory state in Maryland, and you have to have, if they're in there long-term, you have to have a written lease. If you didn't have a lease, then maybe you could say that they were, it was called an unlawful detainer, right? They were there unlawfully, or they broke in, they moved in. They didn't have the protection of the eviction moratorium. So in these cases, we kept evicting, going to court because they were unlawfully living there, right? Yeah. So rightfully so. But, I know personally a couple of landlords, John, they lost everything during this period of time. Now, they were didn't do things the right way, right? They didn't screen the way that they should. And, so though a lot of people were affected during the pandemic and couldn't pay their bill until they got their stimulus checks, until they got whatever other money, their $700, unemployment, for a subsidy over top of their state unemployment. But a lot of these people still didn't pay their landlords because they said, you don't have to pay rent. So what the heck? But so we started seeing the transition where these landlords are going, maybe I don't want to be a landlord anymore. And then combining it with the people that have bought these short-term rentals. What do you think is going to happen? I mean, do you think that, I know LA where, we've talked about this before. Has that eviction moratorium been removed or taken? Was it June?
So there's some things happening in Los Angeles. There's a couple things happening, not just for landlords, but for citizens of LA and California as a whole. One of which is that they are looking to, quote unquote, end homelessness. And one way in which they're going to be doing that is making it harder for landlords. They put all these new tenant protections in. They brought something called a mansion tax, which is a 4.5% tax on property sales between $5 million and $10 million, and 5.5% thereafter. And those funds are being allocated to build out tenant advocacy networks to pursue landlords. So if you look at what's happening, you see a situation in which everything is going against the landlord. Everything's going against the property owner. And Joe Biden just signed something into law. It's on whitehouse.gov. You can look it up yourself, where they want to remove 25% of the homeless in the next 2.5 years. Now, many people would say that's a great thing. And I would say the same thing. I think it's a great thing to give people housing and to take care of people and put people in a better position. All the time people fall bad on luck and they need a helping hand. But at the same time, if there's, California has 225,000 homeless. If you have a situation where you need to bring 75,000 people into housing units the next 2.5 years, how are you going to fund it, right? You're going to fund it by increasing taxes and making things more challenging, by taking from people that have worked hard, that have saved money, that have done right for themselves, and use that to empower the government, not to empower tenants, but to empower the government.
So, John, and talking about, LA, because I know that was one of the longest in the country, right? The moratoriums, and we had spoken about this before, and you said it's going to take years to get some of these tenants out because of the backlog in courts and stuff like that.
800,000 renters behind on rent.
800,000. That's amazing. When you start talking about, these landlords being affected, we've noticed that California, I think, is in the news mostly because of the amount of decline in property values. Mm-hmm. Do you think that it's going to continue to decline? I mean, when would you say that investors will start pouring into California? Are they avoiding California right now?
Well, so Invitation Homes says that they're losing money in one market in the country, and it's Southern California, because of the system. And so you look at, they just issued something on Wednesday last week, which is a zero cash bail. And they said that the reason that they need to remove cash bail is because it is discriminating against those that are in poverty. And so they're saying that basically because of their poverty, they're now in jail, and that's unconstitutional. What I would argue that they would be in jail because they committed a crime and they got in trouble for committing a crime. It has nothing to do with their financial means. They have the habits of committing crimes. And if you commit a crime, the people in the neighborhood should be safe. You shouldn't be caught and then released back into the community, incentivized to do it again.
So do you think it's going to continue getting worse before it gets better? Do you think it's ever going to get any better? Or do you think they're just going to draw a line across the California state line and say, look, this area is no good, man. We're not entering this.
So I'm coming from a place of someone that loves California. I moved to California with no intention of ever leaving, but they're intentionally driving that state into the ground. And it doesn't look like it's stopping anytime soon. It looks like they are going to continue to push and push and push forward. And so if you're an investor and you don't know where the bottom is, then maybe it makes more sense to kind of hold off and see how much further this is going to go. And I think home prices are out of this world in LA. Like you look at a crappy little duplex in like an area that's not safe, $900,000 and a 7% or 8% mortgage rate. I mean, what do you look at? $6,000 a month. You'd have to rent out each unit for $3,500 to break even with being rented 12 months of the year, right? Like,
back in Maryland, 3 investor clients that I have are selling their rental properties.
For what reason?
They don't want to deal with it anymore. Right. And I think the big thing, what do you think about, so let's talk about the mom and pops, right? Because there's institutional investors.
Yeah.
They're kind of, I don't know what your opinion is on that and whether housing should, maybe you could say, do you think that housing, single family housing specifically, I'm not talking about apartment buildings and things like that. Do you think Wall Street should own these single family houses?
Well, I think what Wall Street has done, is my opinion, Wall Street and the media has been weaponized against the masses to convince the masses that landlords are the problem, property owners are the problem, and that rent is way too expensive. And it is. Rent is expensive, but so is everything. Health insurance, car insurance, property taxes, everything is crazy expensive. And to target and say, you know what, screw the landlord, don't pay the landlord, don't take care of the landlord. If that does in fact happen, where we start to see more and more and more mom and pops leaving the business, who's going to step in, right? Is it going to be the tenant? No, it's going to be one of the big firms, BlackRock or Blackstone. They're going to step in and acquire tons and tons and tons of units. And do you think that these companies are going to give a crap about you or your family? No. They're going to price gouge the hell out of you. And anytime you get a raise, they're going to be bumping your rent.
Yeah, well, you know what? I know a real estate investor, a big operator, and he said, hey, well, people are making more money now, so they can afford more rent.
Yeah.
Right. So, and the reason I ask that question is because, and look, I know people need to live somewhere, right? I'm not knocking it, and businesses should make a profit. I'm a capitalist myself, right? Let's face it, right? I'm in business. I'm in business to make money, opportunity, right? That's not a crime.
Right.
That's nothing wrong with that. If I do it honestly and I give a good service, that is okay, right? We go to restaurants, right? Why do we can make it cheaper at home?
Yeah.
Well, why do we go out? Because we want to be served, and you want that restaurant to make a profit, because if not, you can't go there.
Yep.
Right. But when we're looking at, the way I think housing, I don't know, man. I know that there's a place for it, rentals. We need rentals because people can't buy. But the scary thing about what you just said is that these big Wall Street companies are not going to lose.
They're too big to fail.
They won't lose, right? So what'll happen is if we knock the mom and pops out of the race, right, then the only pony is the Wall Street company.
Yep.
That's kind of a scary place to be, right?
Yeah.
Because now if you have to rent and you can't afford to buy, well, what choice do you have? You're going to pay, period, right? Where, my experience as a landlord, and maybe this isn't good, I wouldn't make it on Wall Street. I wouldn't be a good bureaucrat, and I wouldn't be, I wouldn't work well with a board of directors kind of hovering over me. They would get rid of me. They would replace me and bring somebody else in. But I have a lot of clients that feel the same way, as they've never raised the rent. And I'm not saying that's a good business. I say I'm a capitalist, but some people say that's stupid, Todd. Like, why wouldn't you raise the rents? Well, I'll tell you why. Because if I get a good tenant in there, right, and the tenant's paying me every single month on time, they're taking care of the place like it's their own, right? I want to keep them in there, and I want to partner with them, and I want to be, a good landlord, and, I don't want to go through changing hands. But a lot of these big, too big to fail landlords, man, they're bumping 3% a year regardless.
Yeah, I heard something pretty insane that I think it was Invitation Homes in the 2020, back into 2020, when they were doing their numbers. They made more money with an active eviction moratorium than they did the year before. It's because they were getting all these bailouts. So you think about it. They have access to the money. They're looking at a system where people can't afford to live, and they're going to slowly keep moving forward. And so people are digesting that narrative from the media that, landlords and property owners are the worst thing in the world. But there's plenty of landlords like Todd. There's plenty of landlords all over the country that are really good people that are supplying something, and they're looking for a value exchange. Hey, I'll give you a good place to live. Take care of my place. Pay me on time. Let me live my life. You can live yours, and we'll form a win-win relationship. It's unfortunate. It seems like a lot of people are just getting casted as, a landlord, you must be a bad person.
And John, a lot of people become landlords because they buy something, a starter home, like a townhouse or a smaller house, and they buy something else, right? Mm-hmm. So they put a tenant in there.
Yeah.
So they love the home in most cases. They've taken care of the home, and they put a tenant in there. And a lot of these landlords, people don't realize they're only making like $500 a month.
Yeah.
If they're lucky.
Yeah. And now a lot of these landlords are not, because mortgage rates are skyrocketing. And
if they break even, right? But if they had it as a primary mortgage and they still have like a 30-year fixed rate mortgage, they're okay, right?
Mm-hmm.
And but anyway, so what happens is when these tenants move out, if they're not a good tenant, man, these landlords have to go in and spend like $30,000, $40,000 and renovate, in some cases, these properties. I don't think the landlords are prepared for the increase in costs that we're seeing.
Yep, they're not. And there's like a lot of new upgrades that are going to be coming. It's like landlords have had it really good for a very long time. And it looks like the future is going to be more challenging for a lot of these small mom and pops. And the other thing to think about is if 20 million housing units are owned by mom and pops, and remember they said that small businesses were not essential the last few years, and all this money flowed to these big corporations where they were getting like unlimited capital. They had all these different benefits that the small businesses didn't have. Well, what's happening? These small businesses, now mortgage rates are sky high. Their incomes fell, and they're not going to be able to refinance at these higher interest rates. They're not going to be able to get the loan. And so they're sitting on these properties where they can't pull money out, and a lot of them can't sell. And then they have a situation right now where, everyone's against them. People think that it's a good thing for the tenant to be able to stand their ground, but I think people are going to look back on history and realize that was probably a mistake.
So, John, you're talking about interest rates going up and things like that. I think one of the biggest concerns, and man, you're a very forward-thinking type of person, and I know you're very committed to helping people. I mean, you've been doing that even just on your channel. I mean, educating people is a big help. But something that's really kind of interests me is that you believe, and I believe this too, but you believe that we're going to be really struggling with this amount of debt. I mean, we talk about Wall Street businesses and, landlords coming in and buying up all the available inventory. And a lot of it, these homeowners that want to be homeowners can't compete with them. And we're talking about the mom and pops going out of business and or not wanting to just be in the space anymore,
right,
regardless of what it is, whether they can't afford it, their cost, their frustration, rent controls, the potential that they can cap how much they can raise the rents despite no control whatsoever on insurance companies, going up 30-40% in one renewal period, or, property taxes going up. And a lot of these landlords aren't protected with homestead credits and stuff like that, right? So, one of the biggest things that concerns me, and I know you're trying to address this with a company that you have, is the amount of consumer debt that we have right now. And what do you think is going to happen? So let's just think about this. We've got, the affordability issues with housing going out of control. We've got people that can't buy a house and they need to rent. We have mom and pops that are getting tired of renting because of everything else. And they're going to be selling. And then maybe these big businesses are gobbling back up these houses that are available because, that's what Wall Street's prepared to do because they know everybody's going to rent and be happy. Whatever. Mm-hmm. And so anyway, what do you think is going to happen to the people and their affordability with the amount of debt that, let's just say the $1 trillion in debt. And we talked about this a little bit on your podcast, but what do you think is going to happen to these people? Do you think we're going to see bankruptcies? Do you think we're going to see people walking away from their credit cards and their cars? I mean, I know you've
100%.
talked about that.
I'm getting comments on my channel all the time, like I'm walking away from this card, I'm walking away from a car and a credit card, and all these different people are, they don't have an option. A lot of people are feeling like their back is against the wall because when interest rates are really low, the cost to service the debt is affordable. But when the cost of the world is going up and then interest rates are sky high, I mean, we're looking at interest rates on credit cards at 40-year highs. So how do people comfortably afford it, right? If we look at what's happening in the world structurally, we're in the greatest wealth transfer of all time. And so if you're a renter right now, or if you're in a situation in which might not be the ideal, the next 36 months, I believe, will probably be some of the most important periods of your life. It'll be an opportunity for where you can go out there potentially and buy that dream type of life-changing deal. It might be an opportunity for you to, go buy a duplex or a fourplex. But this is the biggest opportunity. So making sure that, if you do have a credit card balance that's really high, exercise a balance transfer. If you can get approved for it and you can get transferred from 24% interest to 0%, you should do it.
Yeah.
I mean, like if you can get into a better situation, exercise it.
Yeah, so that's important to educate people because a lot of people are thinking that they're going to walk away and they don't understand the ramifications of doing that, the destroying their credit for 7 years.
7 years.
Right. And a lot of that, and it really is 7 years from the date of the last activity. People don't realize that. So if you stop paying and you start going into default and things like that. So guys, you have to we'll drop your link to you help people with, I think, I don't want to say it wrong. I mean, do you help them with debt consolidation and what you're saying?
No, what we do is we offer a free consultation to review your credit report, and we'll give you a game plan of what we think will be the best strategy for you.
To try and protect them.
What we focus on exclusively is repairing your credit. So if you have late payments, medical bills, collections, foreclosures, bankruptcies, charge-offs, anything that's impacting your credit score, we can assist with that. The thing about doing a debt consolidation is many people, and you won't hear this from probably anyone else, many people will just say to stop making payments on the bills, and then they'll try to negotiate with your creditors. But when you do that, you trash your credit in the process. So if there's a solution in which you can get out of debt or position yourself without having to destroy your credit, I would pursue that first. So we have a company we can help at greatcreditfast.com, and we can give you a free consultation and see if there's something we can do to help you.
That's awesome. And guys, it's kind of weird for me to close on the, being in John's studio here, but we appreciate you watching. We love you guys. And cruise on over to John's channel if you haven't already done so. Subscribe to him. Let him know we sent you. And guys, we appreciate it. If you like the video, you can let John and I know that you did by hitting that thumbs up. And if you haven't subscribed to our channel yet, you can take a moment, do that now. Smash the alert bell. You'll know every time we upload content just like this. We'll see you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.